But that's the way that it goes. I mean, you could talk about, people say, well, why doesn't silver? I mean, it's the same thing. So silver has been suppressed for a very long time. Now, the reason I believe it's suppressed is for the military-industrial complex. There's 500 ounces of silver in the guidance system of a typical cruise missile. And when you're talking Hellfire, Patriot, Tomahawk, and I have a client at the Department of Defense who has validated this for me, and I've given lots of talks about it. And so they used to publish the silver supply or uses for military in the Silver Institute numbers. They stopped doing it, and we've had about a 200 to 300 million ounce shortfall for the last 5 years in a row on silver supply versus demand. And there are 8 Western banks that hold the price of silver down and have for a very long time through what's called naked concentrated short. JP Morgan was fined $920 million 3 years ago for doing just this. They admitted it. And yet they're still allowed to be the custodian of the world's largest silver trust, SLV, along with BlackRock. So why do I say this?
Right.
What you just said, because think about it this way. Who owns all the military, the weapons manufacturers? In essence, it's BlackRock. And they own them all. At the same time, they're the primary custodian with JP Morgan of the world's largest silver trust, where you need to hold silver down in order to make high-tech weapons. You have 8 Western banks doing this. The largest concentrated short position of any commodity ever traded in the history of the COMEX market is in silver. The same thing is similar in London, where the price is set. Why would they do it? Because they need to keep the price of silver down, and even more than that, they don't want people to go and buy it and make it very hard to get. They need to make high-tech weapons in order to sell all around the world and blow up places like the Ukraine. But then who gets the reconstruction contracts? BlackRock.
Right.
So it's the same thing just in a different thing, it's the same wolf in different sheep's clothes. In this case.
Yeah. Follow the money and the dollars make sense.
Right?
That's what we say.
The money is just a circle because it's all coming back.
So you started touching on silver, and Russell said something in the last podcast where he said silver's maybe even a better hedge than gold, because if gold starts going crazy, silver's going to follow it. Is that kind of your estimate as well?
90+% correlation in their movement since the beginning of time. Not always in perfect symmetry, but as one goes, so does the other. Okay. If you've ever gone water skiing and you go, when the boat turns, the rope kind of loosens a little bit and you go way around that. It's that slingshot. Yes. So typically gold goes first and silver slingshots past it and beats it on a percentage basis. That's the way that it's typically gone. And you're right, if gold gets too expensive, they say that gold is the metal of kings and silver the metal of people. And so I think from a standpoint, the word that I would use is asymmetric, meaning the lowest downside and the highest upside of any asset class I've ever seen, ever. And it's disappearing in nature. Like your skin is epidermis, silver is found in nature in a form called epithermal, right near the surface. The big deposits were found decades ago. And
so it's in shorter supply.
It's coming out of the ground right now at a 7-to-1 ratio to gold. It's mining ratio. It's geologic ratio. For 5,000 years, it was 16-to-1, as was its price. Now, because of that suppression that I mentioned, where the West wants to make high-tech weapons to rule the world, kind of gotta keep silver cheap in order to do that. It's coming out of the ground, or it's being priced right now at what is the current ratio? The current ratio right now is, let's call it 30, so right now it is 88-to-1. It's been there less than 1 or 2% of the time in all of human history. When you talk about asymmetrical, coming out of the ground at 7, priced at 88-to-1, being suppressed because the West needs to make high-tech weapons. The one thing that the West never counted on is the coordination, the motivation, and the sophistication of countries like India, China, Russia, Saudi Arabia, who are now wise to what the West is doing and are using the Western suppression against them, standing for delivery. The contracts on COMEX and in London, the London Metals Exchange, which is a 140-year-old exchange, the oldest in the world, have delivery options. So this is where no one ever stood for delivery my entire career. Rarely, like 1%. And now they're all standing for delivery. Huge amounts of delivery. So instead of the rest of the world just going along with the West's ability to control the commodity prices so they can do things like become the military-industrial complex and make these weapons and rule the world, they're like, okay, we see what you're doing. So you guys go ahead and short the paper price. We're going to stand for delivery. We're going to buy contracts and stand for delivery.
You know, the question I get almost every day is, Andy, if silver's so important, if it's so critical to technology, industry, and defense, why hasn't it exploded yet? And I tell people, that's exactly the point. The reason silver hasn't exploded yet is because it's too important. It's being held down, not by accident, but by design. Now, before anyone rolls their eyes and says, oh, here comes the conspiracy talk, let me make this very clear. This isn't theory, it's arithmetic. The data is public, the structure is documented, and the motive is as old as time: power, profit, and control. Let's start with something simple. The world is running a consistent deficit of silver. For 5 straight years, we've had a shortfall of 200 to 300 million ounces annually. That's not me saying it. That's from global supply and demand data. We're using more silver than we're mining or recycling, and yet somehow the price isn't skyrocketing. In a free market, shortages make prices go up. But silver's been flat or down. So why? Because the silver market isn't free, it's managed. It's a lever pulled by 8 Western banks. Banks that use a mechanism called the naked concentrated short. That means they sell massive quantities of silver contracts on paper, far more than the physical silver that actually exists, to suppress the price. And here's where it gets really interesting. A few years ago, JP Morgan was fined $920 million for exactly that, manipulating precious metals prices. They admitted it. It's not speculation, it's on record. Yet today, that same bank remains the custodian of the world's largest silver ETF, SLV, alongside BlackRock. You couldn't make this stuff up if you tried, so you have the same institutions accused of price suppression controlling the world's largest trust that supposedly holds silver on behalf of investors. What could go wrong? Now think about who owns the defense contractors. The big weapons manufacturers like Lockheed Martin, Raytheon, Northrop Grumman. Who's at the top of that ownership pyramid? BlackRock. Vanguard, the same asset managers who also happen to be custodians of SLV. Do you see the pattern? These are the same players on every level of the game. They profit from war, they profit from reconstruction, and they profit from financial control. And here's where the silver connection gets fascinating, or maybe horrifying depending on how you look at it. A typical cruise missile, Tomahawk, Hellfire, Patriot, contains about 500 ounces of silver. That's not an estimate. That's from people inside the Department of Defense who've confirmed it. Silver's unique electrical and thermal conductivity makes it indispensable in precision-guided weaponry. You can't replace it with copper. It doesn't work. So think about that. If silver suddenly went to $200 an ounce, the cost of every missile, drone, and advanced weapon system skyrockets. The entire Western military-industrial complex, the very thing that keeps the gears of empire turning, takes a hit. So what's the solution? Keep silver cheap. Keep the public out. Suppress the price. Suppress the awareness. Suppress the data. It's no coincidence that the Silver Institute, which used to publish data on military silver consumption, suddenly stopped. They used to list exactly how much silver was being used in defense. Not anymore. That category disappeared right around the time global demand started outstripping supply. Coincidence? Or maybe, just maybe, the less you know, the better. For them. Now let's step back. This is bigger than silver. It's about how the Western financial system maintains its illusion of control. If they can control the price of strategic commodities, gold, silver, oil, they control inflation expectations, they control sentiment, they control the illusion of stability. But that control is slipping, because for the first time in modern history, the rest of the world isn't playing along. The BRICS nations, Brazil, Russia, India, China, South Africa, plus the new members joining them, have figured it out. They know the game. They've watched the West weaponize its financial system, freezing reserves, cutting off countries from SWIFT, manipulating commodity markets. And they've said, no more. So now they're using the same system against us.
So you're seeing massive deliveries happening in London in the United States where the biggest money in the world is taking possession.
Delivery meaning they're taking the actual metal.
Yes. Every futures contract has that ability. Right. So like if you bought a futures contract of oil, you could, if you had a warehouse, say, you know what, I'm going to stand for delivery. And they'll deliver barrels of oil to that warehouse.
That's crazy.
So you can't have a futures exchange that doesn't allow physical delivery, or it delegitimizes it. It's just a paper scam.
Right.
Kind of like the dollar's a paper scam.
It's
lost 99.5% of its value in your lifetime.
Yes, well, it's like if every one of these objects were actually backing a contract.
Yeah.
And you could trade them and move them from one shelf to the next, because this is your shelf, my shelf, his shelf, just move them back and forth and settle in cash. That's the way they normally go. But no, you know what? I want the gloves. Send them to me. Instead of just settling in cash and give me the money, I want the gloves. And that's in essence what is changing. All of a sudden you have a large level of sophistication and coordination. These countries in the global south who are sick and tired of the West being able to rule the roost, at the same time destroy the value of the dollar, which they're doing, as we've just talked about. So instead, they are slowly accumulating assets which are worth more than the dollars that are used to accumulate them.
Right.
They're doing what I'm saying. Don't be left holding the bag in a currency that is by design meant to lose value every single year. I did an interview with a woman named Judy Shelton. I said she was the head, or she was Trump's nominee to run the Federal Reserve. I said, Judy, who the hell came up with the idea of 2% inflation being normal? I said, why not have zero inflation? Because the lower inflation, the higher your standard of living. And she says, actually, she said this to me. She said, actually, it was Janet Yellen and her husband who argued that if you have stable prices, so think of your business. If prices never go higher, you can't give someone a raise, because as you give them a raise and prices never go higher, you never adjust your prices, you start to lose money. So she's like, instead, what we decided was to strive for a 2% level of inflation. Prices go up or the dollar goes down by 2% every single year. Then you can give your employee a 1% raise and they think that they're getting ahead, but they're actually going. She actually said this. I swear to God, she said it on my podcast.
Another government scam. We're so shocked.
Right. So
big surprise.
You give someone a raise to make them think they're getting ahead, but they're actually losing ground.
Right.
And that was actually the reasoning behind what they admit to, why the Fed mandate is to strive for stable prices, but they strive for a 2% inflation rate instead of just stable prices. Wouldn't you rather have prices that don't go up all the time on the stuff that you buy? Now, same thing is true in metals. Right now, you have very little exposure by the public, but you have, since November, the United States has become net importer of gold. We have been delivering into the COMEX market in New York more gold and silver than the United States has ever seen, ever. And I'm talking to the tune of well north of $100 billion coming in, and the biggest money in the world, and the biggest, most sophisticated, and more importantly, well-informed traders on the planet. Central banks have been gobbling up gold and silver. But now the most well-informed traders in the United States are buying gold and silver and taking delivery in New York. No one ever did that.
Let's take the gloves off and talk plainly. The West has been playing a rigged game for decades, and for the first time, the rest of the world has figured out how to win without playing by our rules. You've heard the phrase, don't hate the player, hate the game? Well, the global South isn't hating, they're adapting. They're using the West paper shenanigans against it, and silver is ground zero in that fight. For 40 years, silver's price has been capped by synthetic paper supply, contracts that outnumber the real physical ounces by a factor of hundreds. These naked shorts, primarily run through 8 Western banks, create artificial supply. They flood the market with phantom silver to suppress prices. It's a shell game, and the shells are getting emptier by the day. Here's where it gets poetic. Those very same paper contracts are now being weaponized against the West. Countries like China, Russia, and India have started standing for delivery on their futures positions. Instead of settling in cash, they're saying, send us the metal. That's the financial equivalent of calling the casino's bluff. Think about what that means. For decades, these exchanges, COMEX in New York and the LBMA in London, have operated on the assumption that hardly anyone would actually take delivery. But now record numbers are doing it, and not mom-and-pop investors, but sovereigns and industrial players. That's a revolution in slow motion. It's the same energy that cracked the London gold pool in 1968 when European central banks got tired of America's paper promises and demanded actual gold. The moment too much physical was withdrawn, the paper game collapsed. And the same thing's coming for silver. Because make no mistake, this isn't a theoretical shortage anymore. It's real. For 5 straight years, global silver demand has exceeded mine and scrap supply. Inventories are being drawn down at an alarming rate. The COMEX registered category, that's the metal available for delivery, has dropped by over 50% in just 2 years. Meanwhile, industrial demand is surging like never before. You've got solar panels consuming more silver per gigawatt than ever. Electric vehicles need 50 to 80 grams per car. Every AI data center, every 5G tower, every missile guidance system, every photovoltaic cell, they all require silver. The International Energy Agency estimates that by 2030, solar demand alone could consume half of annual silver supply. And here's the kicker. 70% of silver comes as a byproduct of mining other metals like lead, zinc, and copper. That means even if silver doubles in price, production doesn't surge. Because the primary miners don't respond to silver's price, they respond to the price of their main metals. So supply can't just magically expand to meet demand. You've got a situation where demand is inelastic and growing exponentially, while supply is stagnant and shrinking. That's not just bullish, that's an economic time bomb. Now combine that with the financial repression we've talked about, inflation, negative real yields, declining trust, and you've got the perfect storm. But the real twist here isn't just economics, it's geopolitics. See, the same Western institutions that keep silver suppressed are deeply entangled with the defense industry. The same BlackRock that owns shares in Raytheon and Lockheed Martin also co-manages the SLV Trust. The same JP Morgan that spoofed metals markets is custodian of the largest silver ETF. They have every incentive to keep silver cheap. Why? Because silver is the lifeblood of modern warfare. A single Tomahawk missile uses roughly 500 ounces of silver in its circuitry and guidance systems. Every smart bomb, every radar, every satellite, every drone, all need it. You raise the price of silver to $200, and you've just multiplied the cost of maintaining Western military dominance. So what do you do if you're the system? You keep silver suppressed, not for investors, but for defense. You make sure the strategic supply chain stays affordable, even if it means manipulating markets. And yet, here's the poetic irony again. The same players who suppressed the price for decades are now losing control. The very mechanism they used to dominate global trade is being dismantled piece by the East. China has built its own exchanges, the Shanghai Gold Exchange and the Shanghai Futures Exchange, that deliver physical metal, not paper claims. Russia has linked its commodities to gold and is building infrastructure with the BRICS bloc to trade outside the dollar entirely. Saudi Arabia, a founding member of the petrodollar system, has joined this network. The Belt and Road Initiative isn't just about infrastructure. It's about monetary autonomy. They've developed systems like mBridge and BRICS-Pay, cross-border payment platforms that bypass SWIFT and allow settlement in digital currencies backed by gold. And now they're adding multi-jurisdictional vaults along trade routes. Hong Kong, Saudi Arabia, Dubai, Kazakhstan, where countries can store and exchange physical metals directly. That's the next generation of money. A system where commodities, not promises, back trade. Now, why does this matter to you? Because when those nations settle trade in real assets instead of paper, the demand for actual metal goes through the roof. And since the West reserves are largely encumbered, leased out, rehypothecated, or synthetic, there won't be enough left to meet the call. That's when the repricing happens. Not the slow, steady climb Wall Street loves, but a reset, a vertical repricing that shocks the world. It happened in 1979. It happened in 2011. And when it happens again, it won't stop at $50. The numbers the models point to, $150, $200, maybe higher, aren't crazy. They're conservative. And once silver breaks free, it won't come back down. It'll establish a new floor, just like gold did when it went from $250 to $1,900 and never returned. But here's where it gets emotional, because the people who've believed the longest will be the ones who benefit least if they wait for permission. By the time CNBC tells you silver is in a bull market, it'll already be gone. Let me share something that always hits home. A few years ago, I spoke with a client, a retired engineer, who said, "Andy, I've been buying silver since the 90s. My kids think I'm crazy. They call it my tinfoil hobby." He laughed, but you could tell it stung. Then he said, "But I don't care because I know what I'm holding. And one day they'll understand," I told him. "They'll understand when they realize Dad didn't buy metal to speculate. He bought it so they'd have something real when the world goes digital and dishonest." That's what this is about. It's not just numbers, it's legacy, it's sovereignty. It's passing down something that can't be erased by a policy decision or a software glitch. Because gold and silver don't just preserve wealth, they preserve truth.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.